We're gonna do a roll call. We're gonna do a roll call at B. So let's wait till then. But I would like, however, to call the meeting to order. As I try to be very punctual, as you know, just for the sake of that. So why don't we call this meeting to order? Let me welcome everyone, and let's go ahead and regarding item 1A, statement regarding virtual meetings, PlanRVA. Do we need to read that, or can that be stand as presented?
It can stand as presented.
It stands as presented. So item 1B, roll call, madam, if you would. For attendees and introduction of guests, we have guests too today.
Okay, Chair Holland.
Here.
Dr. Newbell.
Here.
Ms. O'Bannon.
Here.
Ms. Page.
Here.
Mr. Peterson.
Here.
Thank you.
All right, thank you very much. Item 2, old business, March 2021 meeting minutes. Has everyone had a chance to review the minutes, and there are any questions or corrections, and a motion for approval?
Move.
Okay, it's been moved and
Second.
okay. All those in discussion, by the way. No discussions. All those in favor, sign of aye.
Aye.
Opposed, nay. Ayes carry unanimously. The minutes are approved. Thank you so very much. Item B, audit services engagement.
I'll take that, Mr. Chairman. We are we are at the end of the existing engagement with Dunham Off-Hampton Roads. The original intention was to be able to put an RFP out earlier this fiscal year to solicit proposals for audit services for fiscal year 2021. That did not happen. And so given where we are in the fiscal year, we are recommending that we engage Dunham Off-Hampton Roads under their existing, the previous solicitation and their existing engagement with us. And we move forward with an RFP process immediately for fiscal year 2022.
Okay.
We've included in your packet the engagement letter that has been provided by Dunham Off-Hampton Roads PLC, as well as a draft RFP that we've worked on in collaboration with Mr. Ramsey, who's on the call. And so while we would want your action on these two items separately, wanted to make sure that it was clear what the intention is as far as the two relating to each other.
Okay.
What happened and why were we not able to send out an RFP?
The transition in the staffing, I had not.
She's been quite busy this year. Well, above any prior years, she's been quite busy, Mom, from my perspective. Now, one of the questions I have, I'm certainly supportive of it. Always ask the question, how long have they audited us? How long have they been engaged by us? One question. The second question, in terms of the fee, is the fee comparable to prior years, or do we think we'll need an increase?
This would be a continuation of the existing 3-year engagement.
Okay,
So,
3-year.
and yes, sir, it would be comparable. We would expect that the fee would stay commensurate with the prior years. This current fiscal year, the audit expense was $10,500, if I'm not mistaken.
Okay,
That's
good. Yeah,
Yeah.
that's good. That's good.
So this is just a 1-year extension of the existing agreement.
That's correct, and the understanding would be that we would extend it really on the condition that we solicit for new services in the coming year. I will say too that I think while it would still be possible to do an RFP and engage a new firm, given where we are in the year and the transition with our staffing, we felt like it was probably a wiser move to stay with a firm that we're familiar with.
I might, well, Chair should speak on things up front, but being a CPA, professionally understanding the services, costs, and all those other issues, I would say I'm really supportive of that move. And therefore, I'll move that we approve the audit for services as denoted for year 20.
Mr. Chairman, I want to ask one more question.
Please do. Yes, discussion.
Are there any terms in this extension that were not in the original agreement?
Usually shouldn't be. Okay, I've moved and I'm waiting a second.
I'll second.
It's been moved and properly second. Any more discussion? Hearing none, all those in favor, sign of aye.
Aye.
Those opposed, nay. The ayes have it. It's unanimously approved. Good move, Martha. Great job in getting this executed today. Thank you.
So
Right. Go ahead, man.
do we need to review the draft RFP for audit services?
Yes, and this is included really for your first review, so you can certainly spend time with it as you like. Mr. Gregory has not had a chance to review it either, so I would say before we would release it, we would definitely want his sign off, but this has been a project that Mr. Ramsey from Henrico County's finance team and I have collaborated on. So it very much is our prior RFP updated with new language, to keep it current. And then Mr. Gregory does also include the more recent general terms and conditions that we've been working on.
Great.
Added in there. But I certainly would say that it's something that you don't need to take action on today, but we would want to make sure that this is moved to a final draft so that we do put it out in a timely manner for solicitation. I think from a timing perspective, it would be wise to make sure that the solicitation goes out no later than the end of this calendar year so that we can have the kind of overlap and the pre-audit work, lining up, especially if we anticipate that it will be a new firm that we'll be working with. There's kind of more to do in preparation for an audit when you have a new firm.
So you said calendar year though. So.
This calendar year, yes,
Yeah.
I think we need to have it released no later than this coming December.
Yeah, I agree. You're right. This is not something you do lightly with firms and switching. And given our predicament and concerns, I think this is a wise move. So very good. Duly noted, Mark.
So we can let you
See
spend
you.
some time with this, circulate it to Mr. Gregory
Sure.
officially, and then we can have it back on your agenda for approval to release it, according to a timeline that we set up. But I did want to put it in front of you, particularly because of that engagement letter request. I'll just add as a side note too, I think we're fortunate having been part of the process for the CBTA's solicitation for audit services. We've now developed a stronger relationship with the Auditor of Public Accounts. That is one of the entities to whom we must submit our annual audit. And so they have also agreed that they would assist us in the review of the RFP. They won't help in the solicitation itself, but they will give us contact information. You might remember that the last time we went through the solicitation process, we did only receive one proposal.
Yeah.
So I think we definitely want to make sure that we cast the net, widely and
So
make
they
this-
have not reviewed this yet.
No, they have not. They've given me samples and we use that to develop, but we haven't submitted it back to them for review.
Okay. Yeah. Thank you, Ms. Cedar. And you're referring to the CBTA's audit process, which I understand the city is overseeing.
That's correct.
Here's the man.
Ms.
Okay.
White from the City of Richmond's Finance
good.
Department and I sat on the audit
Great.
solicitation committee, and
Great.
it was managed by the Auditor of Public Accounts, and that's a unique way that the code has specified that to occur, but I think it's another resource that we can draw upon for our process.
Very good. That's good to have. Thank you for so noting.
Do we
All
need
right.
to set a time frame for this?
We need to get it prepared.
To get a review back from the folks at the city and your time to review. Right now, it's just wide open end of the year RFP.
Yeah,
We
that's
have
what I was wondering.
What do you think?
We could have
Schedule.
it
What's your
maybe back by
pleasure?
your June committee meeting?
Certainly.
Yeah, how about that?
Doable?
Yeah.
That's acceptable. June is acceptable. And we don't think we need a motion yet. We just need to direct that.
time.
Oh, yeah, absolutely. And then the issuance could occur
This,
over June,
I'm
July.
not too sure
and
for
we
us
would have it
amateurs,
closed by
worth even looking at this, it's been reviewed by the professionals.
Yeah.
Yeah, very good. Thank you. Very good. Thank you. That's adequate. That's adequate. All right. Item C, COVID relief update.
Yeah, I just wanted to share with you, included in your packet, you will find a copy of a letter that was sent following the Finance Committee's last meeting. Worked with Mr. Berkey, who is here on the call with us, as well as Mr. Gregory and Jen Schoenhauer to finalize this letter. So it has been sent. It's actually been acknowledged as received and reviewed, and our property owner's representative has requested a meeting. So Mr. Berkey and I will be meeting with him on the afternoon of Monday, May 3rd. And we will certainly update you on the results of that conversation as it proceeds, but wanted to share with you that we did follow up on an item from the last meeting, and you've got a copy of the letter of correspondence now.
So you're having a meeting to talk with the,
At his request, he requested that we meet to discuss this. In all candor, I would imagine that this topic will relate to our closed session topic later this afternoon.
Well, that's what I was wondering.
And,
Okay,
yeah.
so we can wait on the discuss.
So I think in the instructions you might have
Yeah.
with Mr. Gregory's assistance might be useful to talk through.
You mean our rental contract?
That's right.
Yeah, I saw that because you wanted to defer it for 3 months, but
Mhm.
I don't like being beholden to them and trying to, negotiate. It's not negotiating from a power position, but, yeah.
Okay.
Okay.
So it's just an information item for you.
Okay.
Also, we'll share with you, we are still continuing to evaluate our eligibility. No new programs for relief have come through. This request for the property owner came from last month's discussion about, about that. And so we'll continue to look for those opportunities. And if anyone is aware of something, we'd love to get that information. But as of right now, just in talking with even my colleagues across the state with Virginia PDC, none of the PDCs have been able to access any of the, CARES Act or associated relief programs.
Okay, good. Because it's quite possible they receive CARES funding. It's possible they do.
Some of
I
our
don't
planning
know.
district commissions in Virginia are administering CARES Act dollars on behalf of their member jurisdictions.
Members, okay.
Middle Peninsula, for example,
Okay.
has created a business relief program, and they're
Mhm.
collecting an administration fee from the
Mhm.
from that program. But as you know, we are not involved in any of the local jurisdictions' efforts to utilize CARE funds. So,
Okay.
and the PDCs are not direct recipients of CARES Act dollars.
Since the PDC is required by the state, by the Commonwealth, could they ask for the money and then distribute it?
We have inquired with Eric Johnson, the Director of Department of Housing and Community Development, about the potential for relief to organizations like ours, but as of yet, we have not been included in any of those
Mhm.
state-led distribution processes.
Like other regional bodies, however, like regional jails and regional juvenile detention commissions, those funds could be directed to the regional body via the local government members,
Okay,
if they so chose. But
okay,
and some regional bodies have benefited from that, some have not. A PDC would be similar.
okay, okay, okay. Yeah, I was thinking in terms of the landlord, him or herself,
Yeah, the landlord.
specifically receiving funds and maybe not sharing the goods or the wealth, if I may say.
I don't know if there's a directory, so to speak, of businesses who have benefited from, say, the
Yeah.
payroll protection program or something.
Yeah.
I mean, I don't know that there's a way for us
I'm
to
not sure
even
for
know
us to
that.
verify that.
Yeah.
I know a number of churches did receive monies that
Sure.
have been forgiven. That's what we're just curious. Anyway, thank you for the update.
Okay.
All right, item 3, March financial statements and 2021 projections, page 40.
So Mr. Van Dornick is here on the, I'll direct your attention up to the screen here. He's here on the Zoom call. He's working off site today for another client that was able to join us by phone. We'll walk you through the financials. Dan?
Yes, Martha. The financials, guys, for not having them in the original board package, but we needed to take a little bit of extra time to do some due diligence in making sure that we were understanding the results correctly. One thing to note on the balance sheet, which I see is on my screen, 2 accounts receivable, 1,200, and other current assets account 1,250 accrued revenue. There's 492,000 in what's considered billed revenue as of March 31st. And then there's another $461,000 worth of accrued revenue. The difference between those two is that the actual bill, the accounts receivable, is actually something that's been sent to funders, granting organizations, where we're actually requesting those funds from them. And that bill has actually gone out. The accrued revenue, the 461,000, those are funds that are being recorded as revenue throughout or at the end of the month to recognize the fact that we did actually earn that revenue. The difference is that it has not yet been requested of the actual granting entity. And we had
Yeah, go ahead. Thank you for clarifying, because I want a clarification between 1,200 and 1,250 accrued, the distinction between those two. Because a revenue, accounts receivable, in essence, is an accrual in and of itself is non-cash received, which means I presume that when you receive, it's accrued revenue in essence. So that's why I want to make sure we have a clear distinction on what those two are. Because accrued revenue is revenue that's been earned but not yet received in terms of cash. Correct? Is that our definition of accrued revenue or modified accrued?
Accrued revenue under the modified accrual basis of accounting is that you've actually earned those funds.
Yes.
And so you should recognize those in your financial statements.
Correct.
And you then expect to receive those funds within a relatively short period of time. The difference between 1,250 and 1,200 is that 1,250 accrued revenue has not yet been billed to the actual funding organization.
Okay. When is it actually billed in?
When it's billed, it will be part of the account 1,200. So essentially you have a reduction in 1,250 for those amounts that have already been accrued and recognized as revenue. And then it goes, and then an increase into account 1,200 accounts receivable, indicating that it's actually been requested of the funding organization.
Okay.
So am I understanding this correctly, that we have $950,000 in accrued revenue that we don't have?
Of revenue that's been recognized, but has not been turned into cash.
Right. So we have
Probably the simplest way of saying it.
outstanding right now. That's been already. Is that correct?
But the biggest difference between 1,200 and 1,250 is that
Whether the bill's been sent.
whether the bill has been sent or not. All of the revenue that's shown on the income statement is actually earned by the organization.
Is there a reason why we have not billed this 461,000?
There are different timing aspects to when bills are sent. Some bills are sent monthly, some are quarterly.
Okay.
So we're not behind, then is what you're saying on billing.
Yeah.
I don't think that we are, but that's one of the things that, we're working as a team, Martha, Dan, and I, and, some of the program managers to make sure that we're, on top of, both of those numbers and where they stand.
Yeah, in terms of billing, I think we should have a refined process of billing. And of course, when you generate the bill, you naturally generate the journal entry to receivables, accounts receivable, which is in essence, a non-cash transaction, which is accrued revenue as well. Because when you do it's just like any organization, when you debit accounts receivable, you credit sales or you credit the grant recipient here, the grant payer rather, I should say. And so when you receive the cash, and what we need to really think about, is it monthly, is it quarterly, or should we be doing it? How often should we be doing it? Certainly not annually, but it should be done in a fashion where when we get the cash, once the bill goes out, maybe net 30, we then debit, journal entry, debit cash and credit accounts receivable or accrued revenue. I mean, I'm still working through this.
Yeah, I mean, the mechanics of how the entries will work is monthly as our revenue is earned, we'll accrue it.
Must be accrued at that point. I agree.
And then, no matter, depending on which actual funding source and the billing requirements, that's when, we'll bill according to those requirements. And that's when
Okay.
That item moves from accrued revenue up into accounts receivable because it's actually expected to be received.
So once the bill is let, is when the accrued revenue then becomes accounts receivable per se.
That is
that correct?
correct.
Okay, thank you. Help me, I
Yeah.
appreciate you helping me understand.
That-
I'm struggling as I can.
That's what I was trying to do.
Thank you. That's what we're trying to get to. Thank you for helping me. I appreciate it.
Right.
These statements, for example, Dan, if I may try to say this in my words, financial statements that we have in front of us are for the period through March 31st, which
Mhm.
means that expenses that we have incurred that are billable
Yeah.
through March 31st are showing in the accrued revenue line, but they have not yet been billed as of the creation of these statements because that occurs in April. So in the April statements, you'll see a pretty dramatic shift from the accrued revenue to the accounts receivable because we will have billed for our expenses through March 31st.
Yeah, I'm thinking in terms of revenue, not
Right.
expenses now.
Right.
I view expenses as accounts payable and other accrued unearned revenue. An example of that would be unearned revenue, which is a liability. This was cash received though in advance. This is the opposite, just like deferral
So
versus
yeah.
accrual.
So as a reminder, for the majority of our grant funded programs, we incur the expense and then are reimbursed
Okay,
afterwards.
I got you.
And so
I see.
that's why I say
Thank
it that way.
Thanks, ma'am.
We have incurred expenses, for example, for our transportation programs for the
Okay.
quarter, and
Gotcha.
then we bill at the close of the quarter.
I see. Thanks, Martha, for the clarification.
Yeah,
Helps me.
it's a little bit.
Uh,
It's different.
It's different,
Perhaps another kind of
I agree.
business.
I agree.
Mr. Chair or
Yes, ma'am.
Peter, a question, please.
Yes, please. Question.
Can I get some sense with the CVTA? I understand here that we have almost 60,000 due, but what is the total amount that we are receiving from CVTA for the support that we're giving?
Our agreement with the CDTA for this fiscal year is $210,000.
Okay,
Not tracking to bill that entire amount, so I would view that as like a not to exceed contract.
okay,
I think we'll actually probably be closer to maybe 175, 185.
okay. Thank you.
We have, do we see previous payments from
We're on time with all of the invoices.
They are timely.
Yeah, we just haven't invoiced for the third quarter yet because the month just closed.
Okay. They are paying their bills on time.
Yes.
That's what I want to.
Yes, the
Good.
team is doing what they should.
Good. I always tell my tax clients the same thing. You pay your bills, you'll get good service.
They sure can.
But interesting side story. I have clients that didn't pay last year. I told them, don't even come back until you pay up.
Yeah.
They paid up.
Nice. Okay, so
Anyway, thank you, Mark, for that clarification. Thank you for that question, Ms. Newby. I appreciate
Thank
it.
you.
Helps us to keep abreast of this, and we appreciate knowing that everything's on timely and done well.
right. And the April statement should show a significant change in the accrued revenue transitioning into accounts receivable. But even those accounts receivable, we've had some nice collections during the month. So that turns into cash.
Good, good.
So, you're looking at a historical piece of information that's not, too terribly old,
Okay.
but it still is the end of the last month. And when I first saw your statements, those two numbers jumped right out at me. And so I wanted to spend some time explaining kind of how that process works and how those numbers relate to each other.
Yeah. Thank you. Question.
The rest of the statement, I don't see anything of note on the balance sheet. And then the only other thing of note on the income statement, if you can go to the last page, page 4. So you see that we had a second consecutive month of positive results for the month of March, which brings the 9-month year-to-date total to a positive 53,000. So as the note states there on the bottom, there might be still some corrections as we, make sure that we're fine tuning that accrued revenue versus the billed revenue. And go project by project in that reconciliation. There might be some adjustments, but, feel very strongly that these results as shown are indicative of where, the organization is right now with its 9 months results.
Okay. Any questions? In terms of through March, so we should have a pretty good idea about April, May, and June pretty soon. Is that correct? Excuse me. In terms of that, is that correct?
In terms of projecting the fourth quarter?
Yeah, as it compares to budget, primarily. I'm thinking in terms of.
Yeah, I think we have an expectation that the results will be consistent. I don't know that we can commit to a surplus of 40,000 each of those months.
There was one line item that we discussed prior months that we were concerned about from Martha, Ms. Heater, in regards to benefits. I think it was benefits and the other. There was one line item that was mentioned that we were looking at, make sure that we were on track as we finish the fiscal year.
Yeah, you might be referring to 6101.
Okay.
It's kind of near the top of the section.
Yes,
for
yes,
expenses.
that's exactly right.
That's the leave wages.
Yes.
As you can see, the highest month for leave wages was in December, as
Yes.
you probably would expect with the holidays. But you can see that that's sort of normalized now as we've moved into the spring months. The budget, the total expenditures to date of 156,000, we are projecting to exceed budget. So we're continuing to watch that very closely each month with scheduled leave, just like we talked about last month. And so, I think we are picking up some more revenue than earlier months. And so I'm as Mr. Van Doornik indicated, I think we're still optimistic that we will end the year at better than neutral. Not at a negative, but better than neutral, but it might not be at that, same pace, I don't think, as we hit April, May, and June of, clearing $40,000.
Very good, very good. Thank you.
So we're not going to have the rollover problem of leave this coming year that we had this year, though.
We've definitely had the majority of staff members pick up their leave because of that extension. The board, you might remember, made an extension from December 31, 2020 to June 30th of this year. I was talking with Mr. Spoonhour actually today about whether or not we should recommend an additional extension. We have 2 staff members who have indicated that would be helpful to them since they have, better than 4 weeks that they will lose if they don't take the 4 weeks between now and June 30th.
Mm-hmm.
So I think it's something to consider, and your guidance on that would be welcome. They're preparing to take the time between now and June 30th so that they don't leave it. We've calculated that in, but have indicated that if they were given an extension, they would probably not take all of that time before the end of the calendar or fiscal year.
I think a lot of that would depend on what the needs are here at the PDC for their labor.
Yeah.
If we're in a position where they can take it.
Yeah, I would support
But
it.
if we need them here and we're asking them not to take it because we need them,
Yeah,
that's what we're proposing.
I would say one of the staff members, I think we are in a position from the work that they do and the timelines, it would be okay for them to take leave. It's a little bit harder for the other staff member to take that. He's preparing to and has done a really good job of mapping out his work, but it could go either way.
yeah. Certainly, I appreciate your being on top of that, and I certainly support people first and extension if need be. I don't think the financial should drive that. I think we should put people first. I think she'll call really.
Well, perhaps I
let
could
you-
talk with Mr. Gregory about some different strategies to be able to balance those 2 things and
Yeah.
determine whether it needs to be a policy exemption. We could brainstorm what kinds of, given the circumstances, and maybe come back with a recommendation at the committee. Okay.
Yeah.
Would that be okay?
Is the goal not to have to put out so much money, I mean, without them working? In a few months, you're gonna have a lot more to do?
I would suggest that you also have Mr. Spoonhour, who's vice chair.
Mr.
Winslow.
Involved in that conversation.
Sure.
We're going
I
to be
agree.
directly involved in the rest of this fiscal year in the town council.
Yeah.
And,
I think one of my greatest concerns about our current leave policy in general is that when a staff member carries leave for an extended period of time, the value of that leave actually increases when they enjoy a salary increase. And so if they're carrying large balances of leave, the value when it was awarded and the value when it was taken are different. And so I think we are trying to, I think, get our arms wrapped around how to manage that so that it doesn't hurt the employee, but at the same time doesn't, unnecessarily create an increased expense for the commission.
Well, in other positions, in jobs that I've had, you had to take leave within a certain amount of time.
That's right. And I think we need
And you
to,
couldn't accrue it over so many days anyway.
we have that policy now.
Yeah.
we do, we have a provision that says that employees may not carry over more than twice their annual earned leave balance.
That's a lot of carryover, and
Well,
that's a
yeah.
tremendous amount of carryover.
Well, the other thing is, I know some people took their leave and had surgery, or something, and they used it for that.
We don't have PPO.
No, what?
The personal leave policy, that's not.
We do have a separate vacation and sick, so it's not a.
I mean, I'm just saying that there was, I've known there were incidents where
That's correct.
somebody
Yeah.
they had a problem with their hand and they had hand surgery, real surgery, or not just a carpal tunnel or something. And they were out for like 6 weeks and they took vacation or something. I mean, in other words, sometimes there's a rationale behind
Sure.
it if they can voice that. But I really, I get the point. That there needs to be a cutoff day.
I do think that this has become a topic that is a priority for the organization. And I've had some preliminary conversations due to the recommendations that you all, members of the board, have given with Ms. Lawson from Hanover County and with folks at Chesterfield County to try to understand a little bit more about how we might be able to make some recommendations in this area. And so I think it needs to be something that we focus on in the first and second quarter of next fiscal year.
Very good.
I think the question at hand is, do we try to work with employees until then to be able to, do what you said, Mr. Holland, and put our people first?
Yeah, be fair and equitable and balanced. And, I defer a lot to you and your leadership in this area. And certainly as noted by Ms. Peters. So we should certainly let the chair and vice chair know as well. I know you do that anyway.
I'll communicate with them
You always
and
do.
work with Mr. Gregory over the next couple of weeks and let you know. But I do think it's something that requires some strong evaluation.
I agree fully. I agree. Okay, thank you. Thank you. Thank you all. We have what? Any other questions on the financials as presented? I have to tell you, any other questions before I come? I have to tell you, I'm already, said thank you, Martha, for the leadership these last few months. We've gone through a lot, and I know you know it too well, and I think the results speak wonderfully toward that effort and toward your leadership and bringing us to this point as an organization. So I just want to take this opportunity to applaud you. We're looking at really, really improved numbers as you show here. And I applaud you for that. Thank you for your efforts there. And I want to thank the team as well, while they're listening, I hope, as well, for their efforts, because I appreciate great financial and, more importantly, great financial reporting. As you know, I've been an advocate of that for many years, and I've been on Chesterfield for the last 10 years on doing that. We're doing some remarkable reporting online now in our organization. Board portals, even, I suggested that this morning, at our organizational level to Matt Harris and Joe Casey, board portals for board members who need information and need it. But But I'm really, I gotta say, pleased at this point, and I think it only can get better. Given your hard work and your leadership, it was difficult, it's challenging, I know.
Well, thank you. I will echo your compliments to the staff.
Please.
Diane has done a tremendous job over the last 3 months in really stepping up and I think leading a lot of the work with working with our program manager. So Diane, thank you for everything that you're doing.
Thank you.
And also to Dan, he has not been with us, for very long, but is asking the right questions. And he is, I can tell you, when we meet, it feels really good to be able to have a person who's asking the questions that he's asking and putting the time in to really understand. And I know that, we're taking our time to put the information in front of you, but Mr. Spoonhour has made clear that his expectation for the end of the fiscal year is to transition his leadership from chair to presumably Mr. Winslow with confidence in our financial statements.
Very good.
And we're taking that very seriously. And
Very
just even
good.
last night when Dan called me, I'm appreciative of his effort to put the priority on correctness and provide the information in a timely manner. And I'm really grateful for that.
Yeah.
And also, I should say, while we're saying thank yous, definitely Charles has been a great kind of behind the scenes. His face is not up on the screen, but we talk with him monthly and weekly, and we're really grateful for just kind of the guidance and advice and second set of eyes, and that's been really helpful too, especially through the transition and getting Dan up to speed on things. So.
Very good. Well, thank you. Appreciate that, and I applaud you and your team as well. I couldn't be more pleased because I have to tell you, personally, as I've always taken another step. This is nothing new with this organization, but our school financials and state and county financials are always looked at. I'm skeptical that CPAs were taught to trust, but to verify and confirm and be skeptical. And I'm that type of person. I'm uncomfortable when I can't compare and see the results in the picture. So they look good, and I'm trusting a lot. And I know that you're going to do it well and do it right for the benefit of the organization and for the people that we serve. So I thank you for your hard work. It's been arduous, I gotta say. And I've been in some different situations, but you've done remarkably well. And I just want to say that at this time. Before we transition to item B, if you are so inclined to.
Yeah, I'm ready. Thank you.
Thank you.
Appreciate that. Thank you.
Yes, ma'am.
So Dan and I think we'll talk to this together, but I'll do the part about the number dues. We spent quite a bit of time talking about that at the last meeting. I will share with you that I expect by the May commission meeting, we will have achieved all 9 jurisdictions' approval of the charter amendments, the version 9, as we've come to affectionately call it. So all of those meetings have been scheduled. Many of them have actually already occurred or set to occur this week. And then by the end of the month, we'll have, I think, a nice report on that. I've spent quite a bit of time on the phone with Dr. Casey talking about the Chesterfield member dues, and I think we worked out a nice system there. Many of you are probably aware that Chesterfield County and Charles City County are dual members of the Crater and the Richmond Planning Districts. And so we worked out a funding scheme. Mr. Grabner from the Crater Planning District Commission and I have a call scheduled for Thursday of this week.
Right.
To make sure that we both understand, but the going strategy is to not cap the Chesterfield member dues according to the 250,000 threshold, but instead to be able to align the dues assessment with the TPO boundary. So the population of Chesterfield that is part of the TPO, considered to be part of that coverage area, will be assessed, and the population that's not part of our area would be obviously assessed through the Crater and Tri-Cities. So that's how we've talked about that, and the same offer, if you will be extended to Charles City County.
So that's Charles City, is part of that.
They are a member of the PDC as a dual member, not the TPO.
Oh.
So yeah.
I know they're not TPO.
Right. So
I
so we'll be
somehow thought that was what we were doing already.
We were for the TPO member dues, but not for the PDC. So I think we're bringing those two together. Dr. Casey, I think particularly has been sensitive to and heard the concerns that I had expressed about the ability to benefit from population increase over time. And so I think that this alleviates the concerns that I had expressed in last month's memo. And it is a relatively minor reduction, if you will, in funding that I think, we'll be able to easily be able to get the pace from and just be able to move forward. So it reduces that funding gap, if you will, that had been characterized in the memo I prepared last month from about 50,000 down to half of that. And most of that then is absorbed actually by an increase in funding we are expecting to have through the General Assembly appropriations. So we're very pleased. The General Assembly last year in 2020 did approve a budget. They then, pulled back all of their additional monies, but every PDC in Virginia will be getting an additional $14,000 in the coming fiscal year as part of the budget process. So we're very pleased with that. And that's been, I can tell you, as having worked with the VAPDC now for about, I guess, the last 15 or so years, that has been an effort underway in my entire tenure. So we're really excited to be able to have gotten that increase from the General Assembly. As far as
we've got the formula worked out.
We have the formula worked out, and I think good confidence that we've been able to satisfactorily resolve the concerns that have been talked about at the previous meetings. So.
Okay. And is the rate going to change from what it's been?
The proposal that the board approved on recommendation from the Finance Committee is to maintain that temporary reduction, if you will, to 50 cents per capita for this coming fiscal year in light of the economic conditions. And so next fall, when you consider the rates for fiscal year 2023, you could consider whether you think staying at 50 cents or going back up to our usual 55 is appropriate. But for fiscal year 2022, we did request the holding of the 50 cents per capita in a recognition of the challenges that local governments are facing.
Well, I applaud you, especially working out CRADA, because we are part of two jurisdictions in that regard. The CRADA district, which is the southernmost part of Chesterfield, not my district, but my other three colleagues. And I got to tell you personally, it gave me great heartburn thinking of what the initial alternative was, as you articulated in your memo to us. And I shared that with Joe and my colleagues. I'm clear with them and everyone else. I'm really supportive of this PDC to that extent. I'm very supportive, and I made that very clear and been consistent in that. So I'm pleased that you have been astute in working that out. I think that's another great feather you stripe in your to envision that and to include that as well. I think it's really important.
I think your staff heard your concerns at the last meeting, and I think they've been really good to work with to figure out a resolution. So.
I did as board chair too, by the way. Okay, sure.
On the other sort of revenue side of things, I've given you, I think, a couple of bits of good news there. We are looking at very stable funding with the projections that have been provided by VDOT and Department of Rail and Public Transit for the funding that is used to support the FPO, the RRTPO support services. So those dollars, which represent a large portion of our budget, are in good shape and are coming along. The TPO is tracking for review and approval of the Unified Planning Work Program, which is the feeder into our budget. So as that moves it through the process in the next couple of months, that'll be fed into ours. Our emergency management grant applications are due at the middle of May. And so those are I guess actually they're due next week at the end of April. And so those are in process. Don't quite know all of the details, but I think we're going to be putting together 8 applications for Department of Emergency Management. Those are on behalf of the Emergency Management Alliance of Central Virginia. And we have successfully negotiated, if you will, agreement that the 5% management and administrative costs associated with those grants will be available to the PDC to be able to collect to cover expenses associated with managing those grants. The 8 applications that we're proposing are the most in number that we've put in. That program has been slowly growing over the last 4 or so years. Our environmental programs are also moving forward. We have a call this afternoon with the Department of Environmental Quality where they're going to be sharing what their intentions are for the next fiscal year. So I will know more about that after we have that meeting. But those that we've been invited to submit already have been submitted in March. That's the renewal of our coastal grant programs. And we did submit a new grant application this year. It's a $20,000 grant that we would match with $20,000 of in-kind to be able to assist with flood awareness. This is a program through the Department of Conservation and Recreation, and obviously very timely and responsive to the flooding issues that we've had in our region over the last year. So I've been spending quite a bit of time talking with Mr. Winslow about some of the things he'd like to see kind of in that particular space and the PDC growing in that area. So we'll keep you posted on that grant award. I think we'll get notification on that probably sometime later this summer. And then finally, again, not a lot of information at this point in time, but we do expect to be invited to a new demonstration grant program from Virginia Housing. That organization is formerly Virginia Housing Development Authority, VHDA, and I've been able to be a part of 2 introductory calls where they have shared with us that they intend to release a notice of invitation to apply for funds in May to the 21 planning district commissions in Virginia to apply for funding to implement affordable housing investments in the region. So we've had a preliminary call with Laura Lafayette from Partnership for Housing Affordability to talk about how we could partner with them. As you know, that's the organization here in the Richmond region that really has taken the lead on affordable housing strategy and what needs to happen in that regard. And so our thought is that if we could be the fiscal agent, we could line up with Partnership for Housing Affordability where that entity could really take the leadership in assigning how those dollars could be expended in the region. So kind of more to come on that, but that's sort of an evolving process. And as we learn more, I will share that information with you.
So how would you work with that? Because they actually use the money to buy land or houses. And
Magdalena Walker Foundation.
It could be used to.
We have funded in Chesapeake.
That's
no,
right.
I mean, what would the PDC or PlanRVA, what kind of part would you play in that?
We would be the grantee that would then distribute the dollars, say maybe to the Magdalena Walker Land Trust or another housing organization in the region that develops or repairs homes, those kinds of activities. So I think you could think of us as playing a role similar to the allocation of RSTP and CMAQ dollars. We become kind of the administering agent, but the decision making goes through, my recommendation would be the decision making would go through Partnership for Housing Affordability to pick the best, the best investment opportunities through that work that they've been doing.
For the housing, housing is really important, I think, regionally for all of us. I'm sure that will work for our all good.
It is, but there is an issue though with the affordable housing when they're talking about this. It's not just the people of lower income. A lot of people in very high income are house poor.
True.
The formulas
Very true.
And I think that's going to have to be some discussions as to a break line on that. If you've got somebody that's in a $500,000 home and one of them's lost their job, they got problems. They don't have affordable housing, but I think the affordable housing we're looking at is for at the lower end of this.
Historically.
Yeah, these funds will be limited to benefit people who are 80% of the area median income. So it will not be eligible perhaps to, someone who has a higher income that has made choices that it's overextended themselves.
Well, right now, there's nothing in the market. I mean, there's nothing for sale, much. So that I'm wondering, they'll have to pick derelict properties or something. I get a lot of bulletins about derelict
Or go
properties.
to higher density to minimize the land cost per unit.
I'm
Yeah.
just thinking about right now.
Okay.
Right now,
That's-
there's nothing for sale. Not even high density.
It's very difficult in Hanover County to get to anything, but land is so expensive.
Okay.
But I mean, but right now,
Yeah.
and that's what Laura Lafayette would tell you, there's
Yeah.
nothing for sale.
Okay.
Nobody's
Okay.
selling.
Well, we appreciate updates from you on this. This is an important topic. Thank you. And we need to transition to item 4, which is because time is of the essence. Closed session, we have a closed session.
Yeah, this is about the lease.
Yeah, we need to have that in the court. Yeah, okay, all right.
So we have to-
Let me announce that there's a need to go into closed session and ask that there is a motion to that effect. Action requested, motion that the Finance Committee convene in closed meeting pursuant to section 2-2.2-3711A.29 Code of Virginia 1950 as amended for the discussion of a public contract involving expenditures of public funds and the discussion of terms or scope of such contract where negotiations in an open session would adversely affect the bargaining position or negotiating strategy of the public body, during which all recordings of the meeting will cease. May I have a motion to?
I'll second your motion.
It's been
So moved.
Okay,